The S&P 500 is designed to be a leading indicator of US equities and is meant to reflect the risk and return characteristics of large capital corporations listed in the United States. The 500 corporations which make up the S&P 500 are selected by a team of analysts and economists at Standard & Poor's, known as the S&P Index Committee. In total, they cover about 75% of the American equity market by capitalization and are listed on one of the many American stock exchanges, such as the NYSE and NASDAQ. The S&P 500 is a market value weighted index, meaning each stock's weight is proportionate to its market value. At one time, the Dow Jones Industrial Average was the most renowned index for US stocks. But because it consists of only 30 companies, most people agree that the S&P 500 is a better representation of the US market. In fact, many consider it to be the definition of the market. There are many reasons to invest in the US stock market. Let's take a look at some of the most important. 1. Consistent returns. From 1928 to 2015, investing in a well-diversified portfolio of S&P 500 stocks yielded a geometric annual average of 9.55%. More recently, this has only increased, as within the last 50 years, S&P 500 corporations have averaged an even better annual return of 9.8%. No other market in the world has outperformed such results. In simple terms, this means that to earn a 9.8 annual return on your stock investment portfolio for the last 50 years, all you needed to do was purchase a number of S&P 500 stocks and keep them. With the right investment, the potential return can be even greater. Just look at investment genius Warren Buffett. His company Berkshire Hathaway has been so shrewd in its investments in S&P 500 stocks that since 1965, they have averaged an annual growth in book value of 19.7% to its shareholders. 2. Highest global trading volume. Daily trading volume in the NYSE and NASDAQ averages at about $150 billion US. As an investor, you want to invest in a heavily traded market so that you have the option to buy and sell your investment at your desired price. 3. The capital market of the world. The United States of America leads the world when it comes to wealth, high net worth individuals and middle income groups. These individuals and institutional players are the major buyers in the US equity market, and the large amount of wealth invested forms its backbone. This also helps to insulate small players from getting burnt during a time of crisis. Furthermore, the United States has led the way in post-crisis recovery time and again since the Great Depression of the 1920s. 4. The Federal Reserve Bank. The Federal Reserve Bank is the richest and most powerful financial organization in the world today. Its policies dictate the economy of the United States of America and to a certain extent the world. The Federal Reserve has always been market-friendly, and the quantitative easing programs from 2008 to 2014 helped the US economy and stock market recover from the 2007-2008 financial crisis. In fact, the S&P 500 hit several peaks during this period. 5. An independent market. The United States stock market is considered one of the freest markets in the world in terms of government intervention and remains unaffected by domestic political changes, such as the election of a new president. 6. Open to all. Virtually anyone in the world above the age of 18 can buy stocks listed on American stock exchanges through a brokerage firm. This is one of the major reasons why Financial.org focuses on the US stock market, because our members come from hundreds of countries and they can all trade on the same market without restrictions. 7. Regulation. There are well over 30 stock and electronic exchanges in the United States. All of these, including the NYSE and NASDAQ, are considered some of the most transparent and rigidly regulated exchanges in the world. Sitting at the apex of this regulatory framework is the United States Securities and Exchange Commission, the SEC, which acts as a broad regulatory body comprised of several divisions to ensure a fair and efficient market. They enforce some of the most contemporary and comprehensive laws in the world today, and have fined many of the biggest financial institutions of the world, such as Deutsche Bank, Bank of America, JP Morgan and Goldman Sachs, billions of dollars for breaking laws within the past few years. No one messes with the SEC. 8. America is the home of innovation. The S&P 500 corporations lead the world. Their products set global trends, save the lives of millions, entertain billions, and generally help to globalize the world. Products such as the iPhone, Facebook, Windows, drugs, vaccines, airplanes, microchips and so much more are all created and marketed by S&P 500 corporations or their subsidiaries. It is this great innovation that has led to the S&P 500's return of a 9.8% profit per annum for the greater half of the last century. 9. The US dollars factor. The general rule of thumb for investors is to never maintain all your assets in a single currency. That being said, the United States dollar is seen as the #1 currency in the world and certainly one of the most stable. As such, investors the world over have historically been advised to maintain around 20 to 30% of their assets in dollars, as it acts as insurance against local currency depreciation and devaluation. So how do the high net worth individuals and financial institutions maintain their USD portfolio? They buy US Treasury bills, bonds and stocks of S&P 500 corporations. From all of this, it is safe to conclude that investment in the US stock market is a good decision no matter who you are. Banks, mutual funds and financial institutions all around the world own shares of S&P 500 in America. Virtually all of the richest people in the world invest and own shares of S&P 500 corporations on American exchanges. Carl Icahn, Bill Gates, Jeff Bezos and Warren Buffett, to name just a few. There is just no reason that any one of us shouldn't do the same, as it has proven time and again to be one of the strongest, fair and most consistent markets in the world. An investment in the US stock market is not just the smart choice, it's the right choice.